Good morning. Welcome to the Mortgage Rate Forecast with Scott Criss, your mortgage rates and news for February 2nd, 2017. And hey, let's get going with the charts. Here's what we have. Bonds are currently trading at about 102.16 this morning. Our support's coming in below us. You can see the screen line here, 101.75, and we have some resistance above us at about 102.40. So we're right in the middle of this trading range. Technically, we're trading right at the bottom of this candlestick here. Here's what we got for reports. Unit labor costs, I guess you could say this was bond friendly, but really wasn't a huge impact. It was more bad news today than good news. We had challenger job cuts come out, productivity, jobless claims, and so all of those reports came in better than expected for the economy, which, it's great for the Dow, not so good for mortgage-backed securities. So, here's the news. Unemployment is on its longest streak since 1970. So unemployment's maintaining under 300,000. That's really very good for the economy. But you are probably seeing the Dow is down a little bit, and there's no matter what bias you are as far as a presidency. I mean, at the end of the day, it kind of boils down to one thing. The U.S. is kind of ruffling some feathers of the other world leaders. And, that has impacted the Dow a little bit. So the Dow is a little bit down because of that, but we're also seeing stocks go down too. So why are stocks and bonds going down? Not so good news on both markets. Payroll numbers Friday coming out, and so that's going to be a pretty big market mover. We are in the middle of our trading range, so when the payroll numbers come out, if they come out close to expectations, we're probably not going to dip any further than 101.75, but we're also probably not going to get any better than 102.40. Not to get in my forecast, but we'll do that in a second. But it is going to be a market mover, but it's going to have to be pretty dramatic to really exceed that. To kind of quantify where bonds are trading at today, we're trading at about 102.16. Now, last month we were average trading is right around 102.25. So we're only about 9 cents off. So Freddie Mac, and you can see the source here, Freddie Mac reported the average consumer received a rate in December of 4.2 at 0.5 points. So here's the thing, if bonds are off by about 9 cents from our average in December, chances are average consumers out there are going to be getting around the same rate for, about a half a point, maybe 5/8 of a point on average. So there's your quantification. Let's get to the forecast. The analyst outlook is actually pretty consistent. Both analysts are pretty neutral as far as long and short holdings on bonds. So they really don't think the bonds are going to trade too dramatically. Obviously, a crazier report that comes out in the economy could change that. But for right now, here's what I'm going to forecast. Bond range between 101.75 and 102.40. That means where we're trading at right now, we could gain about 59 basis points or half a point if those jobs numbers and other news throughout the early next week is favorable to bonds. But if it's not, I think the worst that we could hit is a loss of 41 basis points. So you're right in the middle of the trading range. If you want to roll the dice, I would say wait till after the jobs reports tomorrow, see what happens. If you like it, lock it, and that's your forecast for now. Anyway, would love to hear from you. You can leave your comments down below. Let us know what you think. Is the new candidacy, is that having an impact on our economy? And if so, what is that impact? Do you think it's a good impact? Do you think it's a bad impact? And what's your forecast? So we'd love to hear from you guys. Everything likes to be liked. So does this video. Hit that thumbs up before you guys go. And at the end of the day, if this is your first time on the channel, at the top left, if you click that ugly guy right there, that will subscribe you to the channel. So as we do market updates, it'll keep you posted on new mortgage news that's come out. And if none of this really made sense to you, if you're like, man, what the heck do these charts mean? What are these bonds selling for? How does it really impact me as a consumer? Click the link at the top right. That'll take you to Mortgage Bonds 101 and teach you the basics that you should know as a consumer when getting a mortgage. Anyway, that's it for now, guys. We'll be in touch next week. Have a good one. Bye-bye.